Okay, so good afternoon, everyone. For those that are attending in person and those on the webinar, we appreciate your attendance and participation in this webinar about an important topic, and that is payroll and contribution changes as a result of reform, but also some things that we're implementing to comply with accounting requirements that have changed in the last few years, and other things that we're doing to enhance the system and the process to benefit members, employers, and everybody involved. So I'm John Briney. I'm the Enterprise Systems Architect for PSPRS. I've been here since August, so I know absolutely nothing. No, that's not true, but I don't know everything. And so there's some other important people here from PSPRS who will be contributing. And I'll just go ahead and have you guys introduce yourself, starting with our Deputy Director.
That's me. I'm Dave DeYoung, the Deputy Administrator here.
That's it.
Okay.
I'm John Chase. I am the Software Manager.
Don Lanier, the Local Board Outreach, and welcome to everybody who's participating today. And we hope you walk away with something of importance today. Brown noser.
Hello, I'm Christian Palmer. I'm the Communications Director for PSPRS.
And then we also have Mr. Robert Ortega, who's here. He's the Director of Member Services for PSPRS. So a couple things. First of all, if you're attending in person, if you need to use a restroom, it's just out the door down the hall to the right. There's men's and women's right there. I think we have some bottled water in the fridge. There's a few snacks up here if you want those, so have those. You should have, if you're here in person, you should have a copy of the slides that we're going to go through today. And I printed them one per page so that you don't have to squint and you can write notes on there. Just one remark on what we definitely want questions. So you're going to have questions today that we can answer today. There's going to be some questions we can't answer today that we'll have to get back to you on. And there may be some specific questions you have to your situation. If there's something very specific to you and your organization, I'd ask you to hold that. It's definitely important to us, and we can take that offline after this, or we can today, or we can take care of it another day. And then in addition to that, you're also going to have, there's also going to be questions that you think of after this is all over with, and so we'll be happy to take those as well. We'll be taking questions online, and so we will be fielding those. I would ask if you have a question in-house here that you use the microphone so that we can record it and so that people on the webinar can hear it. So that's about questions. As we go through the presentation, you'll see there's kind of three parts. There's the background introductory, which I don't think people have questions about. There's a section about new data elements, which is one section. So what we'll probably do is go through the new data elements and then stop and take any questions at that time. If you're online, you can submit your questions anytime, but just know that we'll probably take that pause and take the questions then. The next section after that is a section about how the file and submission process has changed for uploading your contributions and payroll information. So we'll do that and take some questions. And then the last part of the presentation is about invoicing and payment. And so then we'll do that and take questions. And then we can take any overall questions that didn't come up before. So that's your packet there. You should have two other sheets. You should have a document that summarizes the payroll contribution submission changes. It's a two-pager. It's a bit of an eye test. This most people should have also, because I've been sending this out since the first part of February. It's been updated a few times, but structurally it really hasn't changed. We've done some things like adding some additional contribution codes and being more specific about a couple things, and I'll talk about that. And then you should also have a matrix of changes, which shows in table format for public safety, the Senate Bill 1428 changes, which are affecting everybody in the system. So what we're going to do before we go through the slides is have Robert talk a little bit about the matrix of changes and talk about the different tiers, the different plans within the tiers, and some of the specifics about that, because what we found out in our discussion so far is that having that paired with this presentation and the specific contribution examples that we've come up with has been very well received by employers and found to be very helpful. So, Rob.
Thank you very much, John. As John mentioned, my name is Robert Ortega, and I am the Director of Member Services here. So before we start talking about the actual details of contribution requirements, how that's going to look, data elements, as John mentioned, we thought it'd be kind of good to kind of give a brief refresher on the plan in itself in terms of the plan structure. As you know, come July 1, 2017, we're going to have a whole new plan tier within PSPRS. So let's talk a little bit, and I'm going to be referring to the matrix of changes if you have it in front of you. For those online, I believe they were sent out previously. But basically what I'd like to do is just kind of identify, the different groups that you're going to be dealing with within public safety. So we'll start first off with our Tier 1 group. These are our long-timers. These are the people who have been in the plan pretty much before January 1st of 2012. So they've been contributing to our plan for many, many years. I'm not going to go over the plan structure in terms of DB plans and disability benefits, but there are membership that we've had pretty much in place before the first round of pension reform went into place for 1609. So for that particular group, again, they have a defined benefit plan. Determination of eligibility is always, just like everything else, done at the local board level. As long as they meet the definitions of member within the plan, they'd be contributing automatically as required under statute. Their contribution rate, on the matrix of changes, it does say 11.65, but as some of you all may know, there were some recent decisions within the Supreme Court dealing with contributions of our active membership in not only this plan, but within the other plans that we administer here. So on the matrix of changes, it says 11.65. That is definitely what they're contributing at this point. We will be sharing more information later with respect to how the rollback of contributions will be affecting this particular group of individuals. But as it is right now, they contribute 11.65, and then the employer rate is based upon actuarial evaluations to determine what that individual employer rate is. When it comes to our Tier 2 members are going to be those individuals who came into our plan on and after January 1st of 2012 and continue to be new members up until June 30th of this year. So that would be considered our Tier 2 members. That group became a new tier of benefits as of the result of 1609, which went into effect in 2011. They too are in a DB structure, meaning benefits are calculated based upon a formula. They have eligibility for disability benefits. All that eligibility obviously is also maintained by the local board decisions. They too are automatically enrolled into the plan based upon, again, eligibility, meaning they are in a certified peace officer position or full-time firefighter position. Excuse me. Their contribution rate is also right now at 11.65%. The employer contribution rate is also determined by actuarial valuation. With respect to 1428, the implemented changes that are coming into effect July 1 of this year, there is going to be additional benefit structure for this particular group of individuals. And this benefit structure will basically create a hybrid program for them. Meaning that in addition to their already established contributions into the DB program, they will also have requirements to contribute into a defined contribution plan that will be established July 1 if they are in a position that is not covered by Social Security. So if you're an employer who does not cover Social Security for either your police or fire, this would affect this group. So in addition to their already established contribution rate at 11.65, they will additionally, come July 1 of 2017, be required to contribute into the DC plan at a 3% contribution rate. That contribution into the DC plan will also be matched by the employer into the DC as well. There will be upfront increased contribution on the employer side of 4% for a limited amount of time based upon the individual's membership date into our plan. I'm not going to go into all the structure, but each calendar year, depending on when that individual became a member in our plan, you as the employer would be required to contribute an additional 4% for a limited amount of time, and then it would then reduce down to the matching 3% into the DC program for this group. Now, quickly talk about our new tier of benefits that will be coming into effect July 1. This would be called our Tier 3 members. So these are individuals who are not even in our plan as of yet. So these would be new members into our plan as of July 1 of this year. They will have a new plan structure under Tier 3. And with this particular group, as you all probably are aware if you've participated in any of our other webinars this year or have been paying attention to communications that we send out through the system, this particular group are going to have some decisions to make. Their decisions determine which plan they're going to be in, because they're going to have an opportunity to participate in a DB structure, which again is similar in style to our current programs, meaning they have a pension benefit that's calculated based upon service, salary, etc. They will also have abilities to have disability benefits, as well as survivor benefits, etc. This particular group, again, like I said, they have that DB program, but then they also would have an opportunity to make a decision to enter exclusively into a DC program, meaning if you all are familiar with like 457s, 401k programs, the individual themselves are the driver's seat of their financial future for retirement. So they can contribute into this DC program, which will have also matching contributions on the employer side that they can participate in. So those are the two plans that they can make a decision to participate in. This particular program will require them to make a decision within a 90-day time frame. And this 90-day time frame is basically a waiting period. So even if the member were to make a decision prior to this the 90th day, they still do not contribute into the plan that they've selected until that 91st day. Contributions, we'll probably be talking a little bit more about this in the future. Hold on, quick question. Yes, Mike?
Can we confirm that the defined contribution is a 401A plan?
Yes, it is a
401A.
401A.
457 and I just want to make it's a 401A, right?
The question that came from the group here was the DC plan, is it considered a 401A program? Yes, it is a 401A program. Just using for illustrative purposes on what people understand a defined contribution versus defined benefit.
Well, it's just
The example.
brought it up because it came up yesterday. I was working with our payroll administrator. We were trying to come up with some categories, and I said, this is 401A money. So
Yes.
Since this came up, I just wanted to absolutely verify it's 401A.
It is a 401A program.
Okay.
Great question. Thanks, Michael. But going back to contributions for this particular group, if the individual decides to participate in the DB program, as you will see on the matrix of contribution rates, the DB contribution rate is going to be split between the employer and employee at a 50-50 rate. There'll probably be questions in the future here shortly about what that rate is. All I can tell you right now is there is legislation going through the state legislature to determine how that contribution rate is going to be applied to employers, because there's going to be some structure based upon your population of your group that determines what rate you will be calculated at and whether or not you'd be participating in a pooled program under this Tier 3 structure. So I don't have the specific rates per se under this plan for you at this point. When it comes to the DC, if a member decides to go into the DC program, they will be contributing mandatorily at 9% with an employer match as well. The individual who decides to exclusively go into the DC will also have a requirement to contribute into a defined contribution disability fund. We will be creating a fund for these particular individuals that will fund potential disability benefits for them in the future. And that contribution rate will also be a split requirement between the employee and the employer. Another question. Yes, Mike.
Can you confirm, that's another question we had, is that disability contribution, I think I heard, is it DC money or is it going into the DB plan? Because
it's a specific fund exclusively going to fund a disability benefit.
so would it be,
It's not. It wouldn't be considered a 401A program. It's
So
just
it's not a 401A.
It's just a trust fund that will be established for disability
okay,
benefits.
so it's not, we don't have to worry about the, okay.
Yeah.
It's not for, okay, gotcha.
So that would be for our DC group. The DC member will have an ability at initial enrollment to increase their contribution into the DC program, which is a one-time election. The employer doesn't have to match that increase. They have to just match the statutory 9%. Now, finally, with this particular Tier 3 grouping, I want to go back to the DB program. Should a member decide to go exclusively DB, and again, if they're with an employer, or if you're an employer who does not withhold Social Security for your eligible group, either police or fire, the Tier 3 member will also be in a hybrid program like the Tier 2 members, meaning that they will contribute into a DB program in addition to contributing to the DC program that is going to be established July 1. their contribution into that program is going to be at 3% contribution into the DC. They too will have the ability to make increase of contribution into the DC, which is a one-time election that stays with them throughout their career in PSPRS. So that kind of highlights the different groups and how contributions will be handled within those particular groupings. So I'll go ahead and push it back to John. We do have a couple questions that I'll see if I can handle here right now.
Okay, we have 2 questions from the webinar. Are the DC and the DB pre-taxed and the disability post-tax for the employee?
Great question. We obviously are speaking to the Tier 3 grouping as well as the Tier 2 hybrid program. All contributions into the DB program will be pre-tax. All contributions into the DC program will be pre-tax. The contribution for the Tier 3 member who has to contribute into the disability fund, that additional contribution rate by the employee and the employer, will be a post-tax contribution.
Okay, one more question. Just to confirm, we don't participate in Social Security. Will the Tier 2 DC be automatically enrolled if the employee doesn't make a decision in the time frame?
The question was, will the member be automatically enrolled if they do not opt out by June 30th? Correct.
That's correct.
Yes, a Tier 2 member who does not participate in the opt-out process, which we will begin to roll out here in the next couple of weeks, will be required mandatorily to participate in the DC program if they do not opt out during those periods in which they are employed in a position that is not covered by Social Security. So if they're with an employer who doesn't cover by Social Security, they will contribute. If they then move to a position that is covered by Social Security, it turns off. It's an on-off switch. Got a question here in the audience? Yes, sir.
We'll move it out as vice chairman of the board of trustees. But except for those hired after, those hired after May 1st will have up until September to opt out.
August
Correct?
31st.
Or August 31st, so they will have an extended period.
There will be an extended period of time for a small group of individuals, correct. But for the most part, everyone must make their election by June 30th of 2017. If there are no more questions on my particular section, I'll go ahead and move it back over to John. Oh, we do have another question.
Just clarification, those hybrid plans in Tier 2 and 3 are for only those employers that don't offer the Social Security.
That is correct. Another question.
No, I just want to, this is important for us trying to figure out when the deduction happens for that, those that are participating in Tier 3, DC only, that DB, right, that DB contribution. So it's not 401A money, right? So it's not going into a protected trust or.
I'm sorry.
It's not going into a defined contribution trust nor a 401A trust, right?
I'm sorry, you're speaking of the disability funds.
Of the disability deduction. For people in Tier 3 that opt for DC only, because we're just trying to pin down the nature of that money, so when we put it in our payroll, we account for it right when the W-2s are produced and whatnot.
Yeah. The contribution for those Tier 3 DC individuals who have to contribute to the DC Disability Fund, that is a specific fund and trust that's going to fund exclusively disability benefits. So it's not tied to.
It's not 401A.
It's not going to be 401A money tied to the person's contribution into the DC program. So it's not calculated in terms of the limits that are required under 401A.
Okay.
And it's actually post-tax deduction,
They
correct?
are post-tax deductions.
We have another question. Did you state that Tier 3 original DC 9% can be increased one time only by the employee? Question mark.
That is correct. The question again was, a member who elects exclusively DC, before they participate, if they elect to increase it, is it a one-time only election? That is correct. The member, before they can even participate and start contributing into the DC program, will need to make a decision of whether or not they want to maintain the statutory 9% or increase one time a higher amount and a percentage. But again, that is a one-time decision, and it maintains with them throughout their entire career in PSPRS.
I believe that also applies to the hybrid, so those that are not covered by Social Security who are Tier 3, it also applies to their DC contribution, correct?
That is correct.
Okay, so another follow-up question to that is the hybrid plan for Tier 2 and Tier 3 optional or a required plan if the employer is not paying into Social Security?
If the employer is not covering their particular public safety positions under Social Security, it is a required program. It's not an election that the member makes under Tier 3 that I want to be DB, but I don't want to do the DC contribution. If you are in a position that is not covered by Social Security, you, in addition to the DB, would also contribute to the DC. And again, for the Tier 2 members, it also becomes a requirement if they have not opted out by June 30th of this year.
Okay, has there been any decision made by public safety as to what will be withheld from an employee for the first 90 days for the Tier 3 employees, or will they be enrolled in ASRS?
Again, like I mentioned at the very beginning, it's a 90-day waiting period. There are no contributions whatsoever being withheld in any plan. So that 90 days is not covered under public safety. They're considered a public safety member, but because our statutes require a 90-day period for a decision to be made, there are no contributions being withheld during that 90-day period. In addition to the whole ASRS issue, I can't speak exclusively for ASRS, but what they'll probably tell you is that position is qualified under PSPRS, so there is no eligibility to contribute to ASRS during that 90-day period.
One more. Is there a percentage limit on the one-time election for a Tier 3 DC plan? In other words, can you go from 9 to 20% on the first election?
There is nothing in statutes that sets a maximum for the increased contribution into the DC program. But again, it's a 401A program, so there are IRS limits in terms of how much an individual can contribute in total each and every year into a 401A program. I want to say off the top of my head, it's close to like $52,000 in contribution, or they're close to. But as long as the increased amount that the individual decides on does not go over those particular limits, no, there is no statutory maximum. Back to John.
All right, thank you, Robert. And so now we can get into the slide presentation. So this slide that you're looking at is just a little outline of what we're going to talk about, a little bit of background. And like I said, it's kind of 3 stages: the new data elements, the file changes, and looking at sample layout and contributions, and then talking about invoicing and payment. So as you know, as we all know, the background is that the Senate Bill 1428 passed, becomes effective in July. It's going to require us to collect additional data elements to make sure that we're complying with statute. In addition to that, there's some information that we need to get that we have not gotten before that we need to comply with changes in accounting and auditing requirements on public pension funds. And so that's another source of some of the changes that are happening. And then the third is we're asking employers to help us account for periods of non-contribution so that when we get down the road with a member 20 years and nobody can remember what happened, then we'll have a record of it. So as far as the new data elements go, there are 4. There are really 3 because remember the submissions were separated before, so you were actually submitting by contribution type. So we were already getting that from you, but now that becomes a data element that needs to be within the file. So there's the Social Security withheld indicator, yes or no. There's a submission of the member pensionable salary. And there's been some confusion about the salary. I wish we would have labeled it earnings or wages in the period, because that's really what it is. It's the pensionable wages or earnings of the employee in the pay period. We're asking for non-payment reason codes, and then there are contribution codes, as I talked about briefly, but and we'll talk about those as we go forward. So, Robert, we got a question, which we need to get a mic on here. You can do that.
What I thought, I'm sorry. So what I thought I heard in the last presentation was this pensionable salary here. For the DC contribution and the DB contribution, the definition is one and the same.
That's correct.
So whatever historically we've used for our pensionable pay under the DB, That's just extended to the DC contribution.
Yes,
Identical.
that's correct, yes, so the
For tier one
definition,
and for tier two and tier three.
yes, the definition of pensionable has not changed, so you could say pensionable salary, pensionable earnings, pensionable wages, but it all applies to that period. You'll see as we go forward here, what we're going to implement is a way to validate file submissions up front, so that for you, for employers, and for us, and it benefits the membership eventually, is that once we get a file from you, we know it's correct. We both agree that it's correct. So that way, when you get invoiced, there's not going to be any additional work and rework that's going to have to be done later in the process. So digging a little deeper and looking at these new data elements, the first one, Social Security withheld indicator, it's an optional element, and if it's not submitted, we're going to default it to no, and we know that generally employers are not contributing, but what we tried to do was implement these changes to make things better for everybody, but we also did it so that we could accommodate situations as if things were to change in the future. So as it says, it indicates whether or not there's Social Security contributions made for the member. And again, the reason that we're getting this is because it allows us to verify that we're getting DC contributions as required by statute. The next one is pensionable salary or pensionable wages or pensionable earnings. And this is for the reported pay period. So this is a required data element unless there's a non-payment reason code submitted. And what this does is it lets us accurately maintain salary and contribution information to better serve the member, the employer, the local board. It also allows us to account for wages or earnings, which is the basis for the contract for the plan, and it addresses some issues that have been modified under GASB in the last couple of years. Prior to this, it's not that we weren't collecting payroll. We were collecting payroll, but we were collecting it at the macro level and breaking it down. Now we're collecting it by members, so it's very specific and very traceable. The non-payment reason code, this is required when there are no contributions submitted. So if there are no contributions, there needs to be, we're asking for a non-payment reason code. And those are, you'll see military leave here, you'll see industrial non-contributing. Leave without pay is kind of the everything else category that's not specified here. And then the quit and terminated are self-explanatory. The quit and transferred. Transferred will help us identify someone, if you know they're transferring to another PSPRS employer, that will help us understand that happened, and then we'll expect other things from them as we go forward. So, another question, Rob?
So we don't always know when they're leaving unless they tell us they're going to another agency. So is quit going to work just as well if we don't know the answer, the QU code?
Yeah, if you don't know about transfer, the QU will get the job done. What we want to know is, and so those two are special codes. I know it seems like an oxymoron here where it says they're non-payment reason codes, but you can submit these in the final pay period instead of having to hold the person on until the next pay period. So what it really is an indicator that we should not expect future contributions, either in that pay period or in the future. Okay, so the contribution code is new, but it's not new because this was covered under separate transmissions by contribution code previously. So this data element's required. There's a list of valid contribution codes here which we can go through, and this just allows us to categorize what contributions are. And we'll talk about this. This supports our validation of the payroll and contribution submission. So if you go down the list here, it should, thinking about what Robert talked about earlier, you have a defined benefit contribution, which includes modified drop. If we see a contribution submitted where there are only employee contributions and no employer contributions, then we're going to ask the question on validation, is this person in modified drop? The answer is yes, then we'll expect that to continue. But then we'll also put a flag up to our member services so that we can go and check with the local board to get the approval and get that whole process in place to get the enter drop process completed on that person. The next one is the defined benefit post-tax contribution. If somebody is on industrial leave and they're contributing post-tax voluntarily, that's what that's for. This came out of one of the other employers when we met with them a little bit ago. It's probably going to be rarely seen, but it's there to be used as well. The next one is the defined contribution. So that's for individuals who are participating either in just a straight Tier 3 DC program or in the Tier 2 or Tier 3 hybrid. This next one is the DC disability contribution, and that is post-tax, and that covers the disability portion for someone who is in the DC only. This alternate employer contribution hasn't changed. Those are for people that are retired, that are returning to work under those rules where the employer is submitting an alternate contribution on behalf of the employee. These next three are legacy. So you have, for the elected officials, you have those that are, since that plan is closed, those that are participating in ASRS, there's a portion of that overall percentage that's submitted to PSPRS. And also for those that are in the DC plan, so there's a portion that's submitted for them as well to cover the legacy cost for the original elected officials plan.
What is a modified drop you're putting on your chart up here? What is that considered?
Okay, so the modified drop is, and I may have to ask Robert for some help here, but the modified drop is?
Yeah, I can take that. Modified drop, what that basically is that is for those Tier 1 members who, that's the only group who have drop, who did not have 20 years of credited service on January 1st of 2012. So anyone who's a Tier 1 member can go into drop, but if they did not have 20 years of credited service on January 1st of 2012, what happens is when they enter drop, they continue to be required to contribute into the plan. The employer contribution stops, but the employee continues to contribute in the plan during their drop period.
If an employee is on industrial leave and wants contributions to continue, aren't the contributions still pre-taxed? You have the code listed as post-tax.
Well, I think there's a couple situations there as well, right? I believe there's a program now that may or may not be continued.
That's correct. If somebody goes on industrial leave under public safety right now, there's actually a law in place that, depending on whether or not they qualify for this disability program that's administered by the employer, the contributions continue to come in as normal. But if in the case that person actually expires out of that program or doesn't qualify, but it's still considered an industrial type of leave, that contribution may or may not be a pre-tax contribution. If they're getting some sort of pay through payroll and you guys withhold it on pre-tax, that's fine. But if the member decides to pay directly to the employer contributions out of their own check, that's an after-tax, those are after-tax dollars, and so they need to be coded as such. So as John said, it's probably going to be a very rare instance that that particular contribution code would be utilized.
Okay. So going back to that question, what contributions would be post-tax?
As I just mentioned, any funds received by the member on an after-tax basis, meaning they're writing you a check directly and they're using their own funds that did not come out of a payroll process, would be considered post-tax deductions and need to be coded as such, because we do not want to double tax that member on the back end when they start receiving benefits.
I believe also the defined contribution disability deduction is also post-tax, correct?
That's correct.
Okay, can employees still purchase time back, like a pension buyback? If so, what contribution code we use for that?
Yes, so we have a couple more, and I'll cover that code after I finish the legacy. Okay. So the third legacy contribution is employer public safety legacy. You're probably used to hearing this referred to as unfunded liabilities, I'm sorry. So it's that portion of it used to be all included in one employer rate. We're asking for it to be broken out now so you can clearly identify the normal cost of the contributions and then this other legacy cost, which addresses the unfunded liabilities.
So can employees still contribute and help the fund on a modified drop?
I'm not sure I understand the
Can
question.
employers still contribute to help the fund on a modified drop?
Is this what we want to look into?
That's a great question.
You know how they're using
Applying the statutes as written,
Yeah.
when someone enters the drop program who's under those provisions as a modified drop participant, the only requirement is the employee contribution. When it comes to employer paying up additional funds
That's
to pay down their unfunded, that's something that could be handled on an off-cycle basis, and you can contact our finance department with respect to that.
Will you be able to account for employer contributions made in behalf of the employee while they are on industrial leave per statutes 38-961?
Those particular contributions, again, because they would probably be on a pre-tax basis, you would just be utilizing the normal defined benefit contribution.
Okay, I think there's a question in the audience as well.
Can I get some clarification again on this employer public safety legacy? Is this for the elected officials plan only?
No, it's for public safety. So instead of there being one rate for the normal cost and for the unfunded liability, we've split it out so that we can see the normal cost and the legacy cost, which is payments that are made, which is specific to each employer to address the unfunded liability of the
So
DB.
would that only be applied to tier 3 then, or?
It applies to across the payroll to all tiers. And it's based on the actuarial calculation to address the unfunded liabilities.
So the contributions up top are only going to be the normal cost piece then?
Yes.
Not the full amount?
Yes, it'll be the normal cost piece, and on the employer side, I believe it's also includes the maintenance effort. So, like right now, the difference is 11.65 versus 16.5.
Okay.
Another question from online.
For the non-payment reason codes, do we need to indicate somewhere for the newer employee that falls into the tier 3 that they would not have contributions for 90 days? In other words, if sent in their membership form, how do they indicate that they're on the 90-day window?
Robert, I'm not sure. In the 90-day window, they can make a decision back and forth until the 91st day. Correct?
I'm sorry, can you repeat that question?
For the non-payment reason code, do we need to indicate somewhere for a new employee that falls into the tier 3 category that they do not have to contribute for the first 90 days?
No, not at all, because we would not be anticipating receiving contribution for those individuals. We would have them in our system as someone who's a tier 3 member who's still within their 90-day decision-making window. So until they are on that 91st day, we would not anticipate or expect to receive contributions, and as such, there wouldn't be any reporting of non-contribution during that time period.
Okay.
Another online question.
This is an interesting question. If there's no limit for a one-time increase for a tier 3 DC contribution, and that selection stays with the employee through the entire employment process, what happens if he gets huge pay raises and promotions? This increase will cause with this holding to exceed that allowed by the IRS. What do we do?
Again, if someone's election exceeds the IRS limits for contribution, the employer is required to ensure that those contributions stop. So they would only contribute up until the point that they reach their IRS maximums.
All right. So that covers the new data element. So I don't know if there are any questions on that from online or in-house here that we have about the new data elements. Another online question.
What if the unfunded liability rate is negative? Can we still reduce our employer contribution amount? In other words, they're overfunded.
I believe there's a minimum, correct, Dave? There's a minimum, so it's a situation we talked about where if an employer's overfunded, there's a minimum that's specified by statute, and I don't know exactly what that is, but we can get that out if we understand who asked the question.
Right. Can deductions be taken for the entire pay period in which the 91st day falls? Because our system calculates by pay period, not to the exact date.
Robert, I believe we're leaving that up by employer, correct?
That's correct. All that we are stating to our employers is that we need to see within the system and the contribution reporting, a contribution that includes the pay period that includes the 91st day. Whether or not that's a prorated contribution or the employer takes contribution against the entire payroll, that is something left at that employer level. All that we are stating is that we need to see contribution in the system for the pay period that includes the 91st day.
So the 90-day waiting period of employees do not have earnings, so their non-payment reason code would not be applied, correct?
As I stated in a couple of questions beforehand, they are not required to contribute until the 91st day. So in our system, we would not anticipate or expect to receive contribution, nor would we want to receive a non-payment contribution code because they're not actually contribution required.
Okay, so we can move on here and let's talk about file submission changes. So one of the big changes, and I think that I believe that a lot of employers I've talked to are excited about this, and hopefully you will be as well. And that is that your submissions are consolidated. So it's one file per entity, and the file can contain all contribution types, and it can contain multiple pay periods. And you'll see in the file layout and in the data elements that we're getting that we can break it apart that way and account for it. It'll be much easier than sending, I think right now it's like 6 different transmission types per payroll. So there'll be a lot less work there. So no separate files by contribution type. We are going to use the information in our system about the member, their tier, and their elections to validate the file up front. And you can still upload the file automatically. You can create it manually on the site. We're trying to get away from and plan to phase out accepting paper copies of contributions and paper checks, which I'll talk about in a minute. And so if you have corrections, things can be corrected online when you upload. And I know that I've talked to some employers and they will have information at their fingertips, so when they upload the file, if they have things that need to be changed or corrected, they can fix those at that time. Or you can go back and fix the file and resubmit the file, or you can submit, so those are the 2 ways to do that. If you have corrections that come later for previous pay periods, you can submit those because you can submit multiple pay periods in a file. You can submit those in future file submissions. So the file layout and format, you can still produce your files in the format that you have. Those data elements will be mapped to our new data structure, just as they are now on the site. And that process, I believe, is done once a year, and so that doesn't change. We're still accepting the flat file with consistent data element positions throughout the file. One of our reach objectives, and we don't commit to this, but we're looking at either now or shortly into the future being able to accept Excel spreadsheets. So that's something else that will benefit the employers, I believe. So. Okay, so this is a busy slide. I'll try not to take too long on it. You may need to take this and study. This is maybe one you'll have questions later for, so we'll see. So this is just a sample file layout, and it just covers the data elements that are submitted. So you can see over here the contribution code, the first name, the initial or middle name, and that is now not required. So that's an optional element. The last name, the social security number. This next data element here is whether or not social security is being collected on the position. Again, that's optional. If you don't provide it, we're going to default it to no. This is the employee contribution here, the employer contribution. This is the pay period ending, and then the pay date all together here. And then the pensionable salary or pensionable wages, pensionable earnings, whatever you call it. And then at the end of the file here, this is the 2-digit non-payment reason code. So the contribution code is required. The first name, last name are required, middle name is not required, social security number is required. Social security held is optional, but we'll assume a no if it's blank. The employee contribution not required with non-payment reason codes or with any of these legacy codes, because those are employer-only contributions. The employer contribution is required unless there's a non-payment reason code, but you can submit that in the final pay if there's a quit or transfer. Let's see. The pay period end is required, the pay date is required, pensionable salary is required except if there's a non-payment reason code. Unless you're using the quit or the transfer in special condition. And then the non-payment reason code is required if there are no contributions at all. And those two can be used for a quit or a transfer as well. We got some online questions.
Okay, what about the elected official plan? Are there file changes that we need to be implementing as well?
Yes, this submission protocol applies to everybody, and I'll let John Chase talk a little bit here.
Yeah, for all of the contribution files that will be submitted, we are now requiring this file layout to be applied for all Corp, EORP, and public safety. So this is the new file format going forward.
So can all these plans be sent on one file, or are they separate individual files per system?
One file per plan. So you have all your fire, you have your public,
Corp.
your Corp,
And elected.
and then elected. So that's the requirement.
Anything else?
So what we've done is put together some examples of how these codes are used and put in this sample file format. Again, this is just a sample. You can map your file format to our data elements on the website just as well. So this first example is a Tier 1 public safety defined benefit. So there's a defined benefit contribution, and you can see that the employer portion is different because right now those two rates are 11.65 and 16.5, I believe. That's why that's different. And then there's public safety legacy, which was previously referred to as payments to address the unfunded liabilities, those amortization payments against the unfunded liabilities. So this second example is a Tier 3 public safety hybrid, so the DB and DC. So this employer is not contributing to Social Security. In this example, the member contribution is doubled to 6%. That's the one-time election that we discussed. So here you have the defined benefit portion here, which is in Tier 3 is split equally. And then you have the DC contribution here, which is 3% here and 6% here as the employee contribution. And then again, the public safety legacy payment, which is broken out here, contribution, which is broken out there. The final example on this page is a Tier 3 public safety defined contribution. So you have a defined contribution code here, which is equally split at 9%. Then you have the disability contribution, which is also split. And then you have the public safety legacy, which is as we've already discussed. So on this second page, these are simpler than the other ones. So an alternate contribution is an employer-only contribution. The next example is a non-payment reason code for military leave. So someone's out on military leave. Again, there are no contributions here, so it's required. Again, you can use the QU for quit and the TR for transfer if you're submitting contributions in the final pay period. The last example is a payroll deduction agreement. And so this is members paying for service purchases or other installment payments that are executed or signed with us and executed through their current employer. So this is an employee-only contribution. Okay, so those are the slides that we have. So we'll, on the file change and submission change, so we can take some questions from the audience and also from the people online.
Okay, is there a header and footer required for these files?
No, there's not.
Okay. For those on the webinar, they can't always see what you're pointing to, just so you know.
Okay, well, yeah.
You say, you pointed this up. We have not uploaded our files because of the payment process required. Will that be changed as well? Meaning, when I checked the process earlier, the only way to pay was for a wire transfer of funds.
You want to talk about that, John?
We will be getting to that in this meeting. We are moving forward with a Wells Fargo e-bill solutions. So you will be able to pay by online via an e-check. I believe also credit card, I think, was one of the other options you can do it. Or if you really want to write that check and send it in, you still can, but it'd be much easier to process the payment electronically. And you can still also do your wire transfer if you're really committed to do your wire transfers. It does cost you, I think it's $25 to do a wire transfer, whereas this e-bill will not cost you anything to submit a payment.
And I apologize for overlooking the not being able to see the pointer online. So what I tried to do was, so what I did was kind of scroll through those contributions, and so each one is highlighted. So those blue rows, the rows that are highlighted in blue are the ones I was talking about.
Just to clarify, do we need to make sure this is the way we submit everything starting July 1st, 2017? The answer is?
That's correct.
That's correct.
And I mean, we'll be happy. I've talked to many employers in the last couple months here, and I'd be happy to talk to any employer, work with any employer. I've worked not just with employers, but for their contractors that are working on their systems.
Okay. So since this is a new file format for Corp, is there another code for voluntary cancer insurance payments by employees that does not need to be reported separately, or does this need to be reported separately?
Robert?
Because there's no code up there for the cancer insurance program for Corp.
Is that submitted now online, John?
That's a great question. I would need to follow up with our cancer insurance group, because my understanding with respect to Corp is that it's a one-time payment by that Corp member if they've elected to participate and they're with an employer who's elected to offer it. So it wouldn't be a normal contribution reporting process. It's just a one-time annual payment. So whether or not we would have the ability or would require that reporting mechanism through our payroll portal, I am not 100% sure that we would go through that process, but stay tuned.
When the employee returns from military service and the employer pays all the contributions associated with this leave, what code should be used to identify the military contributions? Currently, we separate our wire payment for this. There's no code listed here.
Yeah, we do not have a code specified. How has that been done in the past, John? Or has that been outside of the contribution site?
It's been outside, yeah.
So we'll have to get back to you on that one.
Okay.
For small employers, will manual entry still be available on the PSPRS website?
Yes. So as stated, so you can upload a file, you create a file and upload it, or you can go on and you can manually enter on the site. What I was referring to that we're phasing out is we have some employers that still send paper that don't use the site at all. So we're trying to get to a point where everybody can use the site either manually or through a file upload. Okay, so moving out of that into the next section of the presentation about invoicing and payment. So this slide in two parts, the top is the process at a high level for submission, validation, invoicing, and payment, and then we have some process notes below that as well. So in the first box there, the payroll file is created or uploaded. So again, it can be manually created on the site, or it could be uploaded as a file. We're going to take a look at it, and we're going to validate it. If you look at the notes here, there's a note that says file validation based on member record at PSPRS. So their social, their the contribution amount, their tier, and their election. So we'll be able to calculate what those contributions should be, and if there's a difference, we're going to work to resolve those differences up front, so there doesn't have to be additional work on researching and payment in the future. So that's a big difference here. If the file is validated and it's good, we hold the submission pending payment for those contributions. We will create an invoice, and we will be sending that invoice to the employer's billing contact. We're going to have employers specify who their billing contact is so that we can get that invoice to them in an email. We're also going to be creating invoices on this Wells Fargo eBill Express. So the eBill Express is Wells Fargo and one of their partners have set up a web-based invoicing and payment system. So you can go on and you can create an account. You can do one-time payments. You can pay you can link several accounts to this site and make your payments. You can see your invoice history. You can download your invoicing history from the site. So that's what eBill Express is, and I have a few slides on that once we finish talking about this process. So the employer can go on and pay through eBill. They can wire as they are now, or they can send a check, and the check is purposely smaller and in red because we wanted to bring to everybody's attention that's something we'll accept, but we're in the process of phasing that out. So looking at the notes at the bottom, so we already talked about that you can create manually or upload a file. Again, some of these are redundant, but you can put pay periods and multiple contribution types in one file. You can correct the file and resubmit, or right there, or you can create a corrected file. So this is the next one on retro payments and corrections. We're asking that those be submitted whole by contribution code and that they be tied to the pay period end date in which the correction applies, so that we can correctly apply those contributions and award service credit. As I said, we're validating up front so we can do away with some of the work and heartache on the back end. One of the biggest differences here is that we're asking employers to pay only after they're invoiced. And again, that gets to, you submit a file, we verify that it's correct, we send you an invoice. So we've already agreed that the file is correct, and so the invoice should be correct, and then that can be paid. Another key point going down the process notes is that employers can continue with their annual and quarterly prepayments. We have employers that submit money for the employer contribution, and so as we do invoicing, we would end up exhausting that prepay first and then invoicing once that's exhausted. The next note is just another reminder that with Wells Fargo eBill Express, that there's no additional charge to employers. So you can go on there, you can link multiple accounts, you can link credit cards, you can do one-time e-check payments that way. So it's very flexible. It's got a nice interface, which you'll see in the next few slides. And again, we are starting to look at phasing out the paper check. Any questions from the audience or online about this process? So these next few slides are just to give you an idea of what eBill Express is. This is the login page, so you can see we will work with the vendor and with the employer to create accounts if people want to have accounts. If you just want to do a pay now, you can just go in and enter a little bit of information that validates who you are and what invoice you're going to pay on. You can make a one-time payment that way. That's all.
Yeah, I just want to interrupt because there's a lot of questions online. The invoice will be generated that night, so you won't be invoiced automatically within the minute. We will have a process that will go out that night and generate that invoice for you. So we will receive that invoice in your email that night. So it's a nightly process that will occur. And so also, when you log into our employer payroll website the first time, you will be asked a few questions. One of those questions will be, what is the email that you want the invoice sent to? So ideally, you would want a group email address. So if someone's out on vacation or if they leave, the invoice will not be ignored. So a group email will blast out to everyone that is associated with that. So that will be one of the questions on the website.
I've got a question in-house here.
So there's only 3 people on my admin staff.
Mhm.
I imagine they'll change at some point. Will there be an option then to update
Yes.
the incoming address at
Yes.
on a daily
Yes.
basis? Or
Yes.
whenever
No.
we
You
send a file?
you will be able to change that email address at any time you want. So it will be completely updatable. There will be a few other questions, but we will get into that much later down the road in a few weeks after we're done with the website programming. But that is that, and I think that satisfies a lot of the questions online.
And John, can you talk a little bit about what we talked about yesterday, which is on invoicing, that the employers can go in and configure which contribution types are lumped together in one invoice or in a separate invoice, so they could be paid from separate accounts?
Right. Okay. So the other part of the stuff that I wasn't going to say, but I will right now, is when you log in, come July 1st, there will be some employers where they pay with different accounts for whatever contribution, military leave or
Disability.
leave without pay. It could come from a different account. So one of the things of what we're doing is you will go in and say, okay, this type of contribution will be paid by this account, and you're not going to be specifying your bank account, but you're going to be grouping your types together by what type of account they are coming out of. So what we'll do is you can upload that whole file, and we will invoice by that type. So you can have a whole file with all those types of the different payments of what you would be paying out as, and we will group those and we will invoice you appropriately. So if you have 6 different contributions and 3 of them are paid with one account and the 3 others are paid by 2 other accounts, we will generate 3 different invoices for you so that you can use the proper account to make the payment for. Bank account. Yeah, and when I say account, I mean bank account.
Okay. So that takes care of the onlines?
No. Okay, what else are we here?
When can we start using the e-bill express?
As soon as we get it set up here.
Yeah.
Actually, we're having a kickoff meeting the end of this week to go into implementation here.
Yeah, this will be rolled out for the July 1st date as of when 1428 has to take in effect. All of this will be in the new websites. And just FYI, all 3 of our websites, the local board, the members only, and the employer payroll website, are all changing dramatically. So you will receive info about that in the coming weeks and months.
Another online question.
When a correction is sent, is it only for the difference, or are we basically creating a file to replace the original file for that person for that pay period? You will be actually putting in for that line what the actual amounts should have been.
Yeah, not the difference. So the whole amount, and it should be, again, tied to the pay period end date that it should be attributed to. Okay, so getting back to the site here, this is just to give you an idea. This is what the login page looks like. This next slide just shows what the home page is. So here you would be able to view bills. You could view a payment status for up to 12 months. You can add payment accounts. You can create payment accounts, and you can view previous payments. So this next page is where you can go and actually make payments. So you can do pay my bills. You can look at all your unpaid invoices. You can check all of them and pay them all at once, or like we were saying, we'll provide different invoices that you can link to your different accounts that you're paying out of, and so you can pick one at a time to pay based on the account that's selected. You can look at details on bills as well. And all of this information that's on the site, you'll be able to extract and download into an Excel file. This is just the account setup, and I have this up here just so you can see at the bottom of the slide where it says Add Bank Account, and going across there on those tabs where it says Set up Payment Types. So you can have multiple bank accounts, you can have multiple card accounts, and again, you can do kind of the e-check payment where if you don't have an account, you can go in and do a one-time payment if you don't want to link your account to the thing like that. So, okay. Right. So those are the slides that are part of the presentation. Again, you have the summary of the changes that the document I referenced at the beginning of the webinar. That is also available on our website. If you go to www.psprs.com. On the front page there's a section that talks about payroll changes that are coming. There's a link there. That the document that's there specifies the interface, and as that document changes, it's being updated there, so you can go back there and check as you need to. We're trying to get an email out every time that we make a change, and again, we're trying to stabilize the document now. We've made a few small changes to the document. This week we put out just small changes specifying that the middle name is optional, and then we also just added a specification that the defined contribution benefit also includes modified drop. So that's the material that we have prepared, and we've taken questions from here in the room. We've taken them from the webinar as well, and it looks like we might have some more coming from online.
So if we enter information on the Wednesday and normally send our ACH payment on a Friday, which is payday, will we be invoiced now on Thursday and have to make the payment on Thursday instead of the normal Friday pay date?
No, you can pay after you're invoiced. Any more questions in-house or any other online questions? And again, if we don't get your questions today, please feel free to get them to us after this, and we're going to take all the questions that we get today and the answers to those questions and add them to our frequently asked questions list as well. So it looks like we have another online and then an in-house question as well.
When will this be in place, tested, as June is a very busy month for our fiscal year end? When will this be in place to use?
Yes, this will be so by the middle of April, we will have a test site up so that you can submit test files. But this will be in place, ready to use at plan now to be the 1st of July.
Yeah, the test web page will strictly only be to test your files. So you can go in there, you'll be able to upload, and just to check to make sure that your file format is correct. We will try to get as much as we can for that site, for that test page, for the validation. So if your amounts are off, we hope to have that in there by that time.
And then I don't have an answer on when the eBill Express would be available, but we're just getting into setting up this implementation timeframe with them. But we have enough time to get through their process before the 1st of July.
What program do we need to use to create a payroll contribution spreadsheet, and do we need to save it as a specific format prior to uploading it?
For the file, currently right now, the only way you can submit the file is if it's a flat file. So you can use Notepad, you could use Word, you could use any of those to save it in a text file. What we are hoping to achieve by July 1st is giving you all an Excel upload option. So at that point, you would just then, instead of saying from position 1 to 5 is the name, you'd say column A is the name, and column, it'd be much, much simpler to do, I think, for y'all to do.
Okay, can you send out a sample text file with a .txt format that we can copy?
Yeah, we can do that. We just need you to get it, to figure out who submitted the question. If you can give us your email, we'll get it to you.
I got it. Okay.
We have an in-house question.
Okay, so to get these contribution right, we got to know our pay. And so Tier 3 has this $110,000 cap that's out there. Has there been any conclusion yet whether that's a calendar year / tax year, or is it for the fiscal year?
The latest information is that will be calendar year basis.
Is that final? Or is that what's the latest information?
It's as of today.
Anything else from the online participants?
John, I think you'll need to go through some of these questions and talk to him personally.
Okay.
Okay.
Yeah. So, and again, like I said, you'll have questions after this. So if you haven't thought of them now, we can take them here as well. If you go on the website, especially for this webinar, my email and my phone number are on there. If you don't have that, if you just call PSPRS here, they can get you in touch with me, and we can talk on the phone, start an email string. So, and then some of the ones that are submitted that are very specific, we can talk about those as well. If we haven't answered your question, get in touch with us that way.
A good question here is, when will the next payroll training be? Once this has been implemented,
Well, yeah. So I think our plan is to put the test site together and put a tutorial together for the test site, and we can do a webinar on that, like John said, and then we'll also have it available online.
Yeah, the test website we will have a little minor webinar about, but the full-blown website, that's slated to be completed by end of April, beginning of May. And after that, then we will put together a webinar for you all, and it just won't be one. We'll do a couple. We are going to be doing a lot of multiple webinars, especially for the members only, for the members.
And John, if I could just chime in really quick. For those who may want to refer to this presentation at a future date, or someone who has not been able to participate and would like to view this, we will have this available on our website on Monday.
Anything else online? Okay. I have a lot of questions online, but we won't do them right now. Anything else from in-house? And again, as I said at the outset, thank you for your attendance and your participation. I know your time is valuable, so that's all we have. Again, we'll talk more if anything else comes up.